Good morning. Sunday morning, 7:10 a.m. Pacific Standard Time. Welcome to StockMarketPunding.com. What we are going to show here on this wonderful morning is a bear market trend on the S&P 500. It's the very beginning of this very long trend that we've had for quite a while, since the lows over here off of the '08 lows. Basically what this video is really going to be about is to let you know why the S&P 500 has changed its course and momentum. Now, rather on the 12th of July, 7/12 of 2010, when the earnings season starts, we're going to find out if it can buck this bear trend. And so basically we're really going to cover this in depth. One of the key elements that we would like to point out is that we started 010 right here on the sell side of this market. So what basically I'm going to do is we'll just take this little bit of time frame right here where that selling started, and then they came in and they ran these things right up to the top, to that green line right here at that 200-week moving average. Now, one thing we do here at StockMarketPunding.com is we have very precise index mathematical formulas, and working with weekly charts is a way to show you where the current market is. So why does a bull trend that once was a bull trend turn into a bear trend? So let's answer that question for you. Once again, we're going to go back over here and we're going to focus on this 10-week moving average, which is this blue line right here. And in 2008, when we put in the bottom, we finally turned around, and the power of working with weekly moving averages is the public themselves and or different types of day traders or investors and whatnot quite don't understand the mathematical equation in weekly moving averages, daily, monthly, yearly, minute period moving averages. And we're just going to enlighten you that once again, folks, the market is broke at this turning point. And when we had the bull market trend that came into play, that blue line went all the way down. As you can see, what happens here, right about over there in '08, we started down, and boy, did we keep going down. And that's a falling weekly moving averages. Not to mention what weekly crossover moving averages mean. Not to mention that when trends start to go very downward, is that these weekly moving averages have a lot of weighting. And what I'm going to show you here is that this whole bull trend that went right on up to here into 2010 made its top. I will draw a horizontal trend line. Basically, this horizontal trend line is the top of the market. Right here is exactly at 1214 where we broke down on 9/28 of 2008. Now, granted that we've had this wonderful move all the way up to that top. This move here from the low to the high is what we call the SMF weekly reversal pattern recognition structure. One of the things that there are indicators such as deeply being oversold on weekly moving average convergence divergence, which we have right here. We also have a topping pattern where our divergences on a weekly are sliding. That means that this high right here, right to there, to that point, from that high peak to that MACD, as we've been declining. That's why any chance that we get any move up is going to fail, as we have told many people. And we told many investors and everyone alike. Now, if you're on the wrong side of the market when this is going down, equities that trade in the S&P are going to go down as well. One of the things that we'd like to cover very briefly is the fact that we were extremely overbought here at 93.68%. And on our homepage, when we called that market top reversal, we have a couple of videos there on the homepage. You can go look at those. And basically, we seen where we started to gradually tilt here on the 10-week going the opposite way. That's a bear trend. It also means that equities, individual equities, will sell once they come off their lows and they go up, but then they turn right around and they go back down. You don't have to worry about all the pundit talk on TV and all the financial myths and or whatever people are preaching and promoting. What you really want to be aware of here is why this S&P is going to go a lot lower. Now, we said several weeks ago that the S&P really doesn't have any support until it gets down here. This is going to be right around, let's call this area right in here at 980. Well, it would be right in here. It'll be 980 on the S&P. It's going to be right in this area. Okay? And basically, you'll have a little pit stop. This is that bridge. This is where that market had broke up, worked its way laterally up to the year-end highs. We sold off, we came up. Now, one of the things here about being 93.68% on that percent GS was we were grossly overvalued. We were grossly overbought. They had just walked that thing up there in light volume and pulled the plug like they always do, and you're probably quite aware of that if you happen to be watching the video. Now, one of the things I will tell you is the blue bar here on this moving average convergence divergence. If we go below this zero, here's zero right here, that's going to create a weekly sell signal. We are on the verge of it. That's one very disturbing factor. The other very, very, very disturbing factor for people that are holding equities for long term is that the market had changed, because it did. And there was a capitulation bar here on May 6th where we dropped 1,000 points. However, the worst thing that could be happening in this market for the bulls right now, and if you're watching the video, the worst thing that could be happening for you is that you're not holding on in the hold and hope mode, which most people like to do. They like to rationalize, justify, minimize. They like to do all kinds of silly things out here in these markets. And let us not be silly, but let you not be silly if you're watching the video, but let you be proactive, because the problem that we have is now the 10-week moving average has crossed over that 20-week. That is very significant. And last week's selling took out the inside week on heavier volume right here. There's last week. So basically we came up and we had a little 2-week short cover rally, as we said that we would, and we've given it all up. And once again, I'm going to get right back and I'm going to blow this up just a little bit more. That line right here, this pink line, is called a 50-week moving average. It's very, 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 very significant because, yes, we had that 2-week move up right here, and yes, the 50-week was rising, and we got support down here where the market was struggling very, very, very difficult in this 3-week area right here. So basically what I want you to know while you're this 3-week bottoming process right here at those at the 50-week rising moving average gave the market support. We got above it. We're breaching that. We've got a 10-week crossover. Folks, I don't know how much more bearish you want, but this is very bearish, because these weekly moving averages, when we look at the relevancy of momentum, we are a short seller in any move up. We came right up. We kissed this red line called the 20-week moving average. right at about 1131 on the S&P. And we have